Short and simple. Top form. Why did it form? When could you have predicted it was going to form? If you were long cover, if you were bearish, get short. Keep it simple. What's not simple is the information that you're looking at. All right. ES is rallying after the open. The NASDAQ over here is rallying after the open. Always looking for where it might stop, even if it's just temporarily. And so look at all the green that will come in a second right here on our 2-minute OPP. All right. I'll move the track bar up a little bit, and you could see it jump. Look at this change here. 113 shorts versus 57 longs. Watch when I bump it out a little bit. Wham. You see that flip? Not only it got even, it went red to green. All right. And I had said it right in here. Look at all the longs come in. You could see it down in here on the totals. Then another thing happened in the upper right. All these blue boxes are buy market orders that are 20 contracts or more, which is a big size order in the NASDAQ, come out. What does that mean? Buy market orders are coming out. We should rally. If we don't, that's a clue. Another thing happened in our MAG 7 index. Take a look at it. It goes, let me back it up a second. It goes from 1660, 216.16, fires down 17 cents lower in one, watch this, in one downtick. There it is, 16. Just keep watching this. 216, 16, 216, boom. 16 down to lower 98s. All right. An 18-cent downtick, which is a pretty big downtick, offer to bid in that particular index. And so this is like, I mean, you were sent a helicopter, you were sent a lifeboat, and you kept saying no, no, and then you end up going to heaven and saying, God, what happened? I kept saying prayers. You didn't save me. So I sent you a boat and a helicopter. What are you doing here? That old joke. So you get too many longs that compete with you right here that flood the market. Too many longs, too many sellers, too many sellers. That's what's needed to go down. Price of anything. You get buy pulse, market order, rejection right here in the NASDAQ, and also some longs that jumped in. And you get a nice downtick in the MAG 7, which are about 50%. Those 7 stocks represent about 50% of the NASDAQ index. So the NASDAQ index is generally only going to be as good as that of these 7 stocks. And so what happens? I'll take the suspense out. We break. And where do we break? Right into support. PWAPs, these red-green lines in the NASDAQ, red-green lines in the ES. Now, again, whether or not this looks like much, it's a 5-6 point sell-off. That's predictable. And it's not about how much. It's not about where it might go. It's always about when. Trading and investing is always about when. Doesn't matter if it's stocks, bonds, futures. Doesn't matter if it's oil or an index. Doesn't matter if it's real estate or a t-shirt at Walmart. It's all about when you buy or sell. And that's important in assigning the value of anything. So we're trying to predict value in order to try to predict price. Look at this sell-off. You mean to tell me this isn't a big sell-off here in the NASDAQ? Where it goes from essentially 85 to 45, 40 handle sell-off. Tell me if you're not long right here in the NASDAQ and you get a 40-point winner and then you get a 40-point sell-off back in your face and you turn a nice winner into a scratch, you're not mad? So you have to be objective. And the only way to be objective is to have tools that are telling you information that's relevant. Not all this mathematical nonsense. Relevant information, other people's positions, big orders, and how they affect the price. Those and then correlations, relationships. That's all relevant in predicting price. Just think when you go buy a house, well, what are they doing? They're appraising it by comparing to other houses in the neighborhood, right? Buyer and seller, how emotional either one is, how many sellers there are on that block versus how many buyers. All that stuff predicts the price of anything that you're used to buying and selling. And then you get into trading and you open up a trading account and you ignore all those concepts and techniques to value price. I don't know why, but that's generally the case for most people who get into trading is they ignore those concepts and techniques that are used in every day to predict the value of anything. And therefore, the ability to predict where it might go. Is it too expensive? Is it too cheap? Is it accurately priced in order to say I'm bullish, bearish, or neutral? And our stubbornness will continue to push us to the path of least resistance. And that path of least resistance is, I think. Who gives a shit about what you think? It's not about what you think. It's not about your own personal opinion. It's about what the market thinks. We're just trying to follow it.